Crypto Hotep here with another investing video. We are on week 95 of the Family Portfolio and Dividends Tracker. I really appreciate the time that you guys spend watching these videos every week. Really appreciate the support, the likes, the comments. It seems like we're trekking around 100 plus views per video right now. I think last week was about 125. So again, I really appreciate you guys taking your time out, listening to the video, and just liking it, and also subscribing to the channel as well. If you're unfamiliar with these videos, please go to week number 1, and that's where my whole methodology lies with why I'm doing these tracking videos, what's going on, how is it going, and basically you're following the investment journey with me and my family. I shortlisted some stocks for them to choose from. My family chose those stocks, and then we proceeded to use M1 Finance as our broker of choice. You'll see that in a second here. And you'll see why we chose M1 Finance as well. And then every week we go through this portfolio. We go through weekly news events, kind of how we're feeling, and just documenting that whole investment journey to show that you can build wealth on very modest deposits, and then also to show what it's like to invest into good companies and not feel deterred or not feel regret or nervousness with having your money in the market investing into these companies. So, but by no means is this financial advice at all. But if you like these videos, please show your support on the channel, guys. Please, it helps us out and helps the algorithm push the video out to like-minded individuals like yourself. So now that is out of the way. And I think one other thing, guys, is with these videos, I always say this, the first people that I think hopefully will gravitate towards these videos are my family, because I'm making these videos because I'm literally speaking to them as well. And that's been the whole premise of these videos, is for me to talk to my family and kind of document what I'm doing with them and for them. So maybe they can carry on the videos. It doesn't matter if they do or don't to me, but just so they can also educate themselves as well and understand the markets to a certain degree. They don't have to be an expert, but just so they can know what's going on. So, but again, let me get off the soapbox here. So for the week of February, we're in February now, so February 1st through the 6th, what events have happened? Okay, so a couple events, key market events that have happened is the Dow Jones actually hit an all-time high of 50,000. It has never hit this before, and it is a very big historic milestone. So the Dow Jones is an indice. It's an indice which basically stands for the Dow Jones Industrial Average. So just like the S&P 500 has certain companies within that grouping, so does the Dow Jones Industrial Average as well. The precious metals, that staged a dramatic reversal. Now, the reason it's saying that is because gold and silver, and I'm just saying those two, all the metals, previously have dropped, but gold and metal has had a very drastic drop. It dropped over about 30 to 40%, which is insanity. It's insanity in these type of markets. Usually you see that at crypto. But for you to see that sharp decline in such a short period of time, it is crazy. So that's one of the biggest reasons, is the big swings, the big volatility. Bitcoin and crypto, speaking of which, that has sold off too. So you have metals, right? You have silver and gold that sold off. You also had and even though I talked about the stock market earlier on with the Dow Jones, stocks have been selling off from the early part of this week. So you had that, and then you had crypto selling off, and it was, if you're an investor, you're like, man, where can I win at here? But Bitcoin did have a harsh sell-off, dipping towards very low 60,000, but it did rebound Friday today, upwards above 70,000. So you love to see that. Just crazy moves going on in the market. It's been a very volatile week. A lot of people are just kind of speaking about this in relation to Trump's Fed chair nomination, Kevin Walsh, because all this happened after that, right? The tariff and trade uncertainty. Again, investors could be a little spooked, not knowing what's going on really with those tariff trades. U.S. and Iran talks are underway, easing some oil risk premiums. Now, there was some scare that U.S. was going to launch something potentially just because the embassy told U.S. individuals to get out of Iran. So normally that's not a good thing. So, but it seems like there are some talks underway. We will see. Hopefully, nothing big comes about that. U.S. labor data. So initial jobless claims, these did rise. So these rose to 231,000. JOLTS job openings also are slated for this midweek as well. And then we've also had some mixed global inflation. Obviously, our inflation already came out. Our inflation number already came out, so we're not really worried about that. And overall, it's been a somewhat quiet week, but there has been a ton of volatility in the markets. So before we go to week 95, we always go to the week prior. So let's go to the week prior here. So the week prior, it saw us at $3,991.71 from a total balance perspective. That went down. So it went down below 4,000. Again, it was very volatile. That equated to a money-weighted rate of return of a positive 1.82%, but that was down as well. A market gain of $67.45, and then a dividend earned of $2.67. So let's see for week 95, what are we looking at and how are we looking? So week 95 was not a deposit week, something to keep in mind. That's next week. So we didn't have any new money coming in here. However, we have cracked back above 4,000. So you kind of see where we're at now, right, with the stock markets. And I always like to mention that is the fluctuations are aplenty, right? We were just down below 4,000 and now we're up above 4,000, right? So for week 95, we're at $4,046.71, money weighted rate of return of 3.24%, which is a drastic upswing from 1.82%. Market gain of $122.45, dividends earned of still at $2.67. So this should be somewhat not that much activity. We did have a dividend payout from Lowe's, which is nice, just 27 cents here, but I'll take that all day. Again, if this is your first time watching these videos and you're scoffing at the 27 cents, my rule is you let the snowballs build up over time, right? These payouts are just pennies, but those pennies do build up. And what we're more concerned and worried about is investing in the right companies and quality companies so that we don't have to worry about it over time and we can continuously get paid for these companies, whether the market's up or down, and continuously build that position up so those dividend payouts can grow as well. So that's what we're focused on. And then other than that, nothing really happened in the market here, under activity, I should say. Okay. So as we always do, let's go bottom to top. So at the bottom, and this is a change of pace here, or no, it's not. I spoke a little bit prematurely. This whole this week, and I'm telling you, this week has been crazy with some of the members of my family kind of swapping spots and everything. But at the bottom currently is our middle, $557.39, money weighted rate of return of 4.85%, still a very good return. Market gain of $25.04, and then dividends earned of 15 cents. Target is still pushing the envelope here and is the anchor on this portfolio. Costco is also the anchor on this portfolio, and then Starbucks is also the anchor. Google up over 3.15%. Amazon, unfortunately, down over 9, almost 9.25%. They had a miss. They had a miss on their earnings. Very rare of Amazon, but they did have a miss on their earnings this week. However, I still stay optimistic on Amazon. Sony down over 12.5%, and then Tesla down over 8.8%. Not too concerned with that portfolio at all. Let's go to our youngest. Our youngest has a balance of $578.98, money weighted rate of return of 2.89%, market gain of $15.78, dividends earned of 16 cents. Starbucks, very similar to our middle, up over 18%. Costco, up over 16%. Apple, doing something good here, up over 2.5%. But Sony, very similar to our middle, down over 12%. And then Tesla, down over 8%. Okay. Let's go to my wife's portfolio. My wife's portfolio is cracked 600, so at $603.63. Money weighted rate of return of 3.42%. Market gain of $19.58. No dividends as of yet. Pepsi did have a fantastic earnings, and Pepsi year to date is up over 18%. That is crazy for Pepsi. Google up almost 3%. Celsius doing what it does, up over 10%. I think these switched here because it was Celsius with that big double digit gains, and now it's Pepsi. And what's funny is Pepsi owns Celsius, so that's funny. Tesla down over 8.5%. We talked about that. And then Microsoft, the Microsoft position, is building. We're still building that position with Microsoft. We're down over 17%, unfortunately, down over 17.5%, if we're being a little bit more exact here. But I will say this: I knew this was going to happen with Microsoft, and I knew a cool off was going to happen. I'm not really worried about that. Again, Microsoft, very good company, not going anywhere. Not really worried about that for this portfolio for my wife. Let's go to my stocks, and I am not the top spot any longer. My balance is $1,148.38. I did have a dip. Money weighted rate of return of 1.31%. Dividends earned of $1.96. Okay, so as we talked about the sell-off, technology, my technology piece is actually down a negative 5.39% year to date. Okay, Microsoft, very similar to my wife's position, down over 17%, and then Google up almost 3% here. Okay, what else? Finance. Our finance sector, which includes Visa and Moody's, down considerably, down over 8.21%. There's been again, these markets, even though the portfolio as a whole is doing well, there's just some pockets in our portfolio that are just bleeding out right now. Pharmaceutical, which is AbbVie down over 1%. Not really worried about that because they were down more than that last week and the weeks prior. So it looks like we're gaining some ground with AbbVie right now. Okay. And then everything else is pretty much solid here. Industrials and energy, real estate, O's doing its thing for us this year. The income driver, consumer and staples up over 16%, and that's Lowe's and Costco. If you find out now, more of the tech, the meme stocks, those type of like very volatile type of stocks are selling off. The ones you see that are gaining ground here are the quote-unquote boring companies. It's the companies like a Costco. It's the companies like Walmart. Walmart hit all-time high this week. Lowe's, like we spoke about, Home Depot. So it's these companies that are very boring, that have a lot of utility, that have a lot of say-so in America's economy, that are really showing positive gains these past couple weeks here of the new year. So it's something to see, that you can see it's more speculative stocks, more technology type of stocks. You're seeing that kind of slowly wind down, and the ones that have been around for so long, like the Coca-Colas, for instance. Let's look at Coca-Cola in the portfolio, because Coca-Cola has been doing numbers. So like, look at Coca-Cola. We saw Pepsi with my wife up over 18%. Coca-Cola's up over 13%. That's crazy. You normally don't see that. Coca-Cola's like, that little engine that could. It's just going to keep going. It may not give you a dramatic swing, but it's just going to keep going steadily along. But to have a double-digit gain currently for Coca-Cola is tremendous. So it's very interesting to see that in the markets, though. You have a direct sector sell-off, and then another sector that's benefiting from it. And then last but not least, let's go to our Otis. Our Otis has a top spot at $1,158.33. Money weighted rate of return of 4.53%. Dividends earn of 40 cents, and then market gain of 49.31. So a very good showing here. Keeping it simple as always. Apple's up, right? Costco, we talked about Costco with everybody else, so of course it's going to be up here. McDonald's still doing its thing, up over 5%, up over 7% right now on McDonald's. And then unfortunately, Tesla, we're in the red here, but watch out for Tesla. Tesla's going to surprise people. You had a lot of news with Elon with SpaceX and I believe XAI. So you had those two companies coming together because I believe SpaceX acquired that one. And so I believe that's going to be bullish for Tesla in the long run. Okay. Anything that Elon touches is going to be bullish for Tesla, I believe. Okay. But all in all, a very good showing from our Otis, very good stocks here. And then for week 95, guys, we have a balance of $4,046.71. Money weighted rate of return of 3.24%, not bad. Dividends earned of $2.67 and a market gain of $122.45, guys. As always, if this video was helpful, please like, please subscribe, please comment. Let me know what you think. Let me know what you guys are investing in. And then also give me some constructive criticism on what I can do better on these videos. But as always, guys, thank you and happy investing.